Hello guys, so today I want to talk about the PM session. How do you trade the PM session? That is the question of the day today. So firstly, you want to annotate your lunch hour macro, 11:30 to 1:30 p.m. New York time, as you can see here on the screen. If you Okay, there you go. If you can just put a rectangle exactly how I did here, so that you don't so that it's easier for you to see the highest high and the lowest low inside that time period. Okay, and then what you're going to be doing is you wait for price to engage either side of that range. Okay, I think that's the easiest way of doing it. So if you want to be bearish, you wait for price to engage buy side, and then it gives you like some sort of bearish market structure shift to the downside, and then you target the lows here. That's an easy ABC. It's like the easiest, like that's like some entry level kind of setup. Okay, but sometimes you can see. Okay, I just want to show you here because we opened at 1:30. The PM session begins at 1:30 p.m. Okay, the opening price at 1:30 is that horizontal line. As you can see, I extended our true session open for the PM session. So now let's say here you waited for price to engage the buy side and you want to go you want to sell. Okay, so what you are going to do there, you wait for buy side to be purged, and this week here, this is a good indication that this was purging liquidity, that bodies remained below the high right there. So that's a good indication. And then this is one of the models that you can use. You highlight the consecutive up close candles. This is on the 1 minute that actually went to purge that buy side. Once you get a close below that, you can go short right there and target anything from that's your change the state of delivery right there. Once you get a close, and you also have a very, very gap right there, which is beautiful. And this is after 2:00 p.m. So that's a silver bullet entry right there. And you can target, you got relative equal lows here. You also have the swing low to that swing high, anything at discount. So these relative equal lows here are at discount of that level. So you can just say sell side, you take something off here and you leave a runner to go all the way down, and that's your sell side liquidity right there. Okay, that's your trade number one. But here there's another trade that I want to talk about. Okay, this trade here is my favorite. Okay, it happened on Friday. So after that, you saw a retracement and price failed to continue to the downside. It left this low here intact, and then we rallied. Okay, what was up here? We had relative equal highs, and also this generated more buy side liquidity. We also had relative equal highs there. What these highs are from the AM session. Okay, it was made at 10:30. So going further in the session, this is what happens. Okay, so you get a close. So if let's say you wanted to add or pyramid into this position, because you are gonna go short right there, stop loss above the swing high here, the candle that forms the fair value gap, right? Or if you want to be very conservative, you can even use that and you target the low here. It's still a good ratio. Okay, so you are trading the PM session. The PM session is very like there's a lot of macros going on, so there's a lot of I would say choppiness So you want to be very careful with the stop loss. You want to be using the swing highs and the swing lows, okay? So for example, if you went short right there, your stop loss is safe right there, especially for beginners, okay? You go short inside the fair value gap since you closed up below the con 4 consecutive up close candles. You cross them right there, a CB and a fair value gap, you go short, and then it goes all the way down. And then you take a partial here, maybe 80% off, and then you target any discount areas. You can also have this BC down here. You can target that because it's reclaiming that, and then you see this rally. Okay, you wait for a reaction here. If you see that it's respecting the premium fair value gap here, going below the close of this candle, then you can put the positions back in. If that runner was trailed, you're out at break even when this happened. Okay, you put it back and you target the loss. But if you close above the fair value gap, exactly how we did right there, at first it started there, and then we're using this now as an inversion fair value gap now. It's an inversion fair value gap, bullish inversion fair value gap, okay? Because you want to study let's use orange because I like orange for inversion fair value gap. And then once you see a displacement higher, you know what's happening there. You have relative equal highs. And boom, what time of the day is that the macro is going to run on liquidity? These guys are now making what profit? So we are looking to liquidate whoever has their stop loss up there and was going short. So it's very important to pay the trader as you go, okay? Because the trade loses value as it gravitates towards your draw, which in this case was the what lunch hour lows here. So this trade was an A plus when you got in here because you saw a change in state of delivery after lunch hour highs were pushed. Okay, and you have what relative equal lows down here. So it's an A plus when you enter, but when it comes close to the draw, you can't really add or maybe take a new position and say I'm bearish because because you are close to the draw, right? So it becomes especially after hitting Persian liquidity down here, it becomes 50-50. You have to wait for more confirmation on retracement because the trade goes from being an A plus to a scenario where it is now a 50-50. You can't really trust it. So it's very important that you take note of those things, okay? You don't want to be holding on to trades that are now 50-50 and you keep on adding, okay? That's why it's important to take partials as you go, especially if you're moving from premium to discount, okay? At discount, you offload something. At premium, we add more positions. That's what you guys should know. So here, you can see the build up. If you're an experienced trader, you can buy this order flow here, target the highs here. That's your second trade inside the PM session silver bullet. So that's the second trade right there. Also, you're trading now at the macro 250 to E10 macro. Okay, that macro engages that New York AM buy side liquidity, and then what happens after that? The one at 315, right? This candle opens and it purges this buy side that cleared this buy side right there. So that's what your 315 to 445 macro is now in play. So it runs on liquidity. What happened here? We generated more sell side liquidity, right? After that, what price does is it breaks lower, creating a bearish market structure shift there. I like that body close. And then look, what did I tell you about the PM session? It's very volatile. So I'm gonna be using the swing highs because normally this is where I would go short. That fair value cap there. Once we enter, it's either I would wait for a second, I would wait to see if price respects that, or I go short and put my stop loss above that because this macro has already ran buy side and it hasn't ran sell side, and sell side right there. But that will be my entry right there, stop loss right there. But what happened after that? pushed higher, created a BC, and then eventually broke below that, creating an inversion fair value gap. And then the next market, the final hour macro, comes in at 350 to 410, right? It also runs that liquidity, which is buy side, refers back to the inversion fair value gap low right there, and then it starts to smell, to melt, going towards the true session open and the relative lows down here, and it purges all of them. Beautiful PM session, if you ask me, but you need to be very careful during these macros. Look at how buy side does run here, running that buy side, and then we open 315 again. It runs buy side. Yes, we bearish market structure shift, but we still target buy side. So if your stop loss when you're going short here, you put your stop loss here, you're gonna be tagged out right there, especially on these brokers, the CFD brokers that I use. You need to be very give it like a few pips above your swing high that you normally put your stop loss in, because you're not trading the futures market. And then that drop happens, and this is the beautiful drop that I was talking about. So how many trades did you have here? We have 1, 2, that bullish order block, and then this is the third trade, which is something maybe I'd go short right there. Stop loss above the swing high or CE to be safe, and then boom. I don't even care what happens here. I'll be tape reading this while it happens. So I did not take this trade, but it's a trade that I wanted to share with you guys. Okay, so this is now the 30 seconds chart. This is what happened. I just want to zoom in on this trade on the 30 seconds chart. Buy side ran, and then we run that buy side at 315, and then this is now the consolidation. Almost ran that buy side right there, but remember now we have a bearish market structure shift here. We have a bearish market structure shift, so that high is our intermediate term high, short term high, and we are creating a short term high again here because this high did not take out that high. So we retrace, respect that high, and then inversion fair value gap on retracement. At that time we clear buy side right there, because the macro, look at the opening prices of the macros, guys. This is no coincidence. Look at the opening prices. They all ran buy side. Okay, this was the closing price because you opened right there, but it already you knew. And this is the trade. You remember that bullish order block? I wanted to highlight this fair value gap on the 30 seconds. The entry was more visible. It was nice, much nicer on the 30 seconds. The 30-second chart after that inversion fair value gap. It's not visible in this time frame, but that's another second silver bullet. Boom, aiming that buy side, and then you're trading the macro. So the macro here already ran sell side, bullish market structure shift here, and then that's your fair value gap to buy side, and then it it delivers 315 clear buy side. That's a bearish market structure shift there. Fair value gap, nice fair value gap, future stop loss above the rejection blocks. Boom, because now you're going to be trading like the final hour macro, and exactly at the opening price we run buy side and then drop, change your state of delivery when you close below that, and that meltdown is just legendary. Beautiful price action, if you ask me. And these are the type of setups that I like to trade during the PM session, which is what I'll be trading with the bootcamp guys again this week. We'll be trading a lot of PM sessions, and this is what we will be doing. And yeah, I hope this was very insightful, guys. It's as easy like ABC daily cycles every day. It won't stop. And yeah, see you guys on the next one. Leave the comments. Yeah, maybe you guys want me to maybe teach you guys other topics. You just let me know in the comments. Okay, like and subscribe to the channel. Yes, cheers.